Hello, everyone, and welcome in to crushthestreet.com. I am Kenneth Amaduri, and I'm joined today with Mickey Fulp, the mercenary geologist, someone who's on the pulse of the resource market, and visits all the conferences. Even when I started getting into the industry and just following the resource sector, I remember him just being that authority in the space. And we're going to get an update on the markets with Mickey himself today. Mickey, thanks for coming on Crush the Street with me.
Well, thanks a lot, Kenneth, and thanks for the kind words. And I remember meeting both you and Daniel, I think originally perhaps in San Francisco at a gold show.
Absolutely. Yeah, those were the early days, and how things have progressed since then. And so, yeah, let's talk about the gold market. Going back to 2011, we know gold was obviously in that very euphoric time. It was moving up higher, and since then, we've just seen really this depressionary environment, and gold kind of going lower and teasing us with a little cap bounce, and then going lower and then teasing us with another cap bounce. And sure enough, we saw $1,300 this year. It moved up nicely, but only to see it go back down below $1,300 decisively. Let's talk about it. What's the state of the gold market like, in your opinion?
Well, in the near term, I would say not good. Like most speculative bubbles, I think gold got a little bubbly when it went to 1900, and it took the 40% retrenchment, and it's come back to what was the 1300 level and has stuck there for a while. But we hit a 7-month low today at 1250 gold. So to me, that's a buying opportunity. I'm in Vancouver now, and I trot over to the bullion exchange here and pick up an ounce of gold every couple of days. So I really don't mind where the market is right now. It is what it is. But there is some concern with downside resistance at 1240, where we actually, as I'm watching right now, we just dipped below 1250 to 1249.80. If it breaches that resistance at 1240, then we're looking probably at 1205, which is the 52-week low around 1205. But let's look at this in context of a near-term seasonality. This is the summer doldrums, and we always expect to see a seasonal, if not a year low for gold during this time of year. And really, what has moved gold up or down since for nearly a year now, July 15th of 2017, when North Korea shot a couple of missiles over Japan, and Trump comes up and calls Kim the little rocket man, and the North Koreans came back and called Trump the old dotard. Since that period of time, as the dollar goes up, gold goes down and vice versa. So it really is a function of the strength of the U.S. dollar at this point, too.
Yeah, no, and we're seeing the U.S. dollar get stronger here. We're in the 95, at the 95 level for the U.S. dollar index. Things are getting stronger, and the economy is looking stronger. People are optimistic about what Donald Trump is doing, and I know we can look at all of the fraud and the manipulation and the stimulus and everything that we've had going on, but the sentiment of where things are is very positive. So there's not that role of fear and that safe haven role of playing in gold's favor right now.
Well, I would agree with that. And there's little safe haven demand. I don't know if that is well placed or not. I'm still continuing to accumulate gold on dips, and I hoard gold. I don't buy it to sell. I don't look on it as an investment or a speculation. It's a safe haven for me. But gold's role, in my opinion, is the same as it ever was, to take a line from a Talking Heads song. Let's face the facts, folks. Gold is the only real money, and all these fiat currencies that are floating around are continuing to devalue all the time. So it's a way to protect your wealth against financial collapse, against financial crisis, economic crisis, and as an ounce of gold bought you a good suit in 1920 and bought you a good suit in 1935 and 1960, and it still buys you a good suit today.
Yeah, that's the powerful thing about gold. And what's interesting is, considering the dynamics for gold and gold not having that safe haven demand right now, it really is an extreme environment in the sense that if we're not seeing gold go to $700, $800 in this very, very optimistic environment, it would suggest to me that we're probably at pretty close to a low here, and any sort of move in the positive direction for gold, or I guess the negative direction for the economy, will
Mm-hmm.
really start to seep into gold.
Well, I would think so. And let's look at what's going on right now with the weaknesses. Gold is as temporary. I remain bullish on gold in the mid to long term, but in the short term, and really only talking till after Labor Day. This is a seasonal trend right now, exacerbated by the strength of the U.S. dollar. Trump's on record of wanting a weaker U.S. dollar. But once we get past Labor Day, then we have the Indian festival and wedding seasons, a very strong time for gold demand. Then we have the love trade, which another Austinite, Frank Holmes, coined that term, I think, and that's the November to December buying season, when all of us are buying a bling for our significant other, and that involves gold. So I look at gold, the downturn right now, to be a temporary thing. And like I said, Kenneth, it's a buying opportunity, I think. I'm not going to tell you it's not going lower, but I'm just picking away at gold as it continues to dip here. Now back to 1249.80. So it popped up to 1250.20 for a minute or two there.
So, Mickey, then looking at what we saw in 2017, we really saw in many cases, and we'll get your opinions on it, the legitimacy of blockchain really come online. It was much different world in terms of cryptocurrencies prior to 2017, but
Mm-hmm.
the fact that we had 2017 really put cryptocurrencies on the map. I mean, we really started to hear about IBM implementing blockchain, and
Mm-hmm.
futures market. All of a sudden now it's traded as a commodity, and all of these things that really had momentum, creating momentum in regards to cryptocurrencies. But I'd like to just get your thoughts on the possibility of digital money, and is it taking away? Is it competing with gold's role or historical role as money?
Well, I don't think it competes with gold's historical role as money. I do not view Bitcoin at all as money. I don't even view them as currencies. I view them mainly as speculative bubbles. But we should not conflate cryptocurrencies and blockchain. Blockchain's the technology behind cryptocurrencies, but and blockchain has lots of uses outside of cryptocurrencies. If we look at Bitcoin, for example, it has been a speculative bubble. It went to $19,343 as we speak this morning. It is now at $6,099. So that's a 68% loss. So it went exponential, and when when any financial instrument of any kind goes exponential, it will go parabolic, and we've seen that with Bitcoin. Uh, I am, I think, blockchain technology will have lots of applications, and is a technology that we will see increasingly important in the future. The cryptocurrencies, I'm not so sure of. Now we have governments coming in trying to regulate them or tax them, or there's a bunch of Bitcoin millionaires who are sitting, and now they're Bitcoin 400,000-aires.
Mhm.
And a lot of those people didn't realize that capital gains uh, on uh, on Bitcoin going to be treated just like capital gains on everything.
Yeah, it's another world, and we'll be talking about the Bitcoin bubble, for years. What
Yes, we
happened
will.
with the market in 2017? I mean, that was the most epic bull market that I've ever been a part of, and it was incredibly exciting. And there can be case studies done on it, how the market was able to wash and rinse people, how many people actually that were in Bitcoin in 2011 didn't sell by the time it was in 2012, and didn't ride the wave up to really experience that 10,000x return. And how many people bought maybe at the beginning of 2017 only to dump a bunch of brand new money in at $20,000 Bitcoin the end of 2017 to watch it all go down and make absolutely nothing. And again, that's just the nature of markets, though, wouldn't you
Hey,
say? Mickey?
no, well, yeah, for every trade, there's a winner and a loser. So, you know, unless it's a Ponzi scheme.
Right. Yeah, absolutely. Well, okay. So, blockchain's obviously something that was popularized last year. Are you optimistic in terms of any sort of cryptocurrency or blockchain as it pertains to just the development of technologies and the way you see things going forward?
Well, I have to admit, I'm not an aficionado of cryptocurrencies. I've stayed away from them. I do what I know, which is metals and markets and gold stocks and speculating in those sorts of things. So I'm probably not the guy to talk to about that, but I do know enough about blockchain that I think it's going to be, it is a very useful technology. And I think we will see it increasingly used going forward.
Mickey, so I was actually watching CNBC earlier this week, and we were
Uh-oh.
just watching the markets, the way they've been the last few years, and you hear lots of things on a platform like CNBC, and
Hmm.
somebody brought up the idea that we might be in the middle of a 20-year long bull market in equities. And, the argument is that we have millennials actually starting to get higher paying jobs now. The baby
Hmm.
boomers are retiring. The millennials are a bigger generation. Things are potentially going to go into hyperdrive because of all of this growth. Is this a possibility in your opinion?
Well, most ideas, especially economic ideas, financial ideas, are possible. Even something I would consider a silly notion, such as a 20-year bull market. If you're talking about a secular bull market for equities going over 20 years, well, it's never really happened before, but I'm not saying it couldn't happen. We would certainly have bear market dips within that 20-year super cycle. Financial uh, investments and tend to work in 5 to 7 year cycles within 20 to 30 year secular cycles. So bull markets, bear markets. We see that in commodities. If you look at commodity super cycles, they have a 20 to 30 year time period, and that's usually inverse to financial stocks and cycles. So certainly possible. I wouldn't hold my breath. You're a millennial. I'm a baby boomer. You might witness that, and I don't know if I'll be around long enough to witness
Ah, don't say that. We'll chip your brain and stick you in another body. We'll keep you
that.
around. Mickey, so again, going back to this idea that we're not necessarily going to have this economic collapse is are we going to go into this boom phase? Is all of this just nonsense? This idea that the central banks don't have things under control. Is hyperinflation still a possibility for a country such as the U.S. going forward here, or is it not going to happen in your opinion?
Well, we didn't see it happen when we thought it would. Anybody that subscribes to an Austrian economic theory would have thought, and I was one of those people, that we would have thought there would have been extreme hyperinflation after the 2008 global economic crisis. I think the real concern here is debt. The U.S. is up to something on the order $20 trillion in debt right now. And, 10, 15 years ago, that would have been unconscionable. People would have said, when pigs fly. Well, pigs have flown, evidently. The idea of hyperinflation, one thing that amazed me as we came out of the global economic crisis and the few succeeding years to that was I was amazed at how the banksters were able to rein this problem in and get it under control. But what they traded for was so-called quantitative easing, where they issue money, they issue debt, and then they buy it back. Now that is ending or has ended worldwide. But what we've come out with is governments that are still spending way more than they're taking in. The people are continually being taxed more, and it's not sustainable. We all know that fiat currencies eventually collapsed. Every one of them that has existed in the world has eventually collapsed. So at some point, I think an economic collapse is inevitable. I just can't tell you when it is, and I don't think now that it'll be in my lifetime. And perhaps we would be faced more. I think the concern would be deflation and depression versus hyperinflation.
Wow. Well, Mickey, I'd love to give you an opportunity here to share some closing thoughts and just kind of what are you telling your subscribers nowadays in terms of what are you expecting from 2018 going into 2019 and how to be prepared for that?
Well, I think we look at this, we still think that we are on the verge of another bull market for commodities. It has not progressed as quickly as we thought it would, but when you look at metal prices, they're well off their lows. Oil is now at a plus 2.5 year high. We're at 73.50 today. My gosh. And oftentimes oil leads the way, gold in a seasonal low. So I'm looking at this as buying opportunities. We expect the junior resource sector, which is my bailiwick, to come out of the summer stronger. And so we're picking away at stocks that are beaten down and undervalued. As contrarians, we try to find trends and see trends and take positions when stocks are unknown, unloved, unwanted, and undervalued. And that's what we're doing right now.
Powerful stuff. Mickey Fulp, everyone, the mercenary geologist. Mickey, thanks for coming on Crush the Street with me today.
Hey, thanks a lot, Kenneth. Good to speak with you once again.